The year is 2025, and for anyone paying attention, the warning signs are impossible to ignore. The same patterns, the same misplaced optimism, and the same reckless behavior that preceded the worst economic collapse in modern history are resurfacing. Many people glance at rising stock charts and assume prosperity. But those who understand cycles see a very different picture, one that looks eerily like 1929. Most people associate the Great Depression with breadlines and barren farmland. But the real story began long before the crash. The Roaring Twenties were more than glamour and jazz, they were defined by an enormous financial bubble so seductive and widespread that the entire nation convinced itself that the boom would continue forever. Sound familiar? Here's the frightening part: every major indicator that flashed before the 1929 meltdown is glowing bright red again. Inequality, unchecked speculation, easy credit, and governments scrambling to keep the illusion alive. We're not approaching a repeat of history. We're already standing in it. The real question is whether you see it in time. Imagine America in 1928. The stock market had surged for nearly 10 years. Everyone from wealthy elites to shoeshine boys was buying stocks. Credit flowed endlessly. People borrowed heavily to invest, convinced that the future could only bring more wealth. Newspapers cheered the rise of a new economy. Politicians swore the boom and bust cycle had been conquered. Technology, they said, would rewrite the future. If that sounds familiar, it should be because we're living through the same fantasy. In the 1920s, the Federal Reserve kept interest rates artificially low. Banks handed out loans with little regard for risk. Speculation wasn't just tolerated, it was praised. Markets had gone up for so long that people simply forgot they could ever go down. Today, we've spent over a decade with near zero interest rates. Whole industries exist only because borrowing has been cheap. Venture capitalists throw money at companies that have never made a profit. Cryptocurrency and meme asset speculation make the gambling of the 1920s look tame. And anyone who dares to question the sustainability of this environment is branded a cynic who doesn't get the new economy. But the most troubling part: wealth inequality today is even worse than it was in 1929. Back then, the top 1% held roughly 23% of all wealth. Today, it's over 32%. The concentration of assets among a tiny elite would shock even the magnates of the Gilded Age. Why does this matter? Because when too much wealth sits at the top, spending power at the bottom eventually collapses. The ultra-rich can only consume so much. Real economic strength comes from a stable, well-funded middle class. But today's middle class is buried in debt as basic costs rise out of reach. The underlying structure of the economy is cracking. In 1929, everyday people were massively overleveraged. They bought stocks on margin, often paying just 10% up front. When prices dipped, margin calls triggered forced selling, accelerating the crash. Today's leverage looks different but is equally pervasive. Corporate, government, and consumer debt are at record highs. Student loans, credit cards, mortgages, most households are stretched thin. And yet, leaders continue insisting that this time is different. Central bankers talk about soft landings. Politicians claim spending creates prosperity. Tech giants insist their valuations are justified by groundbreaking innovations. It's the same hubris, the same denial, the same belief that the laws of economics can be suspended indefinitely. Worse still, society today is more vulnerable than the America of 1929. Most people back then lived in small towns or on farms. They had practical skills and could survive disruptions. We, on the other hand, depend entirely on global supply chains, digital payments, and fragile systems built on trust and credit. When confidence fails, the shock won't just be financial, it will be societal. The wealthy already know what's coming. Billionaires are quietly buying farmland and constructing bunkers. Central banks are accumulating gold even as they dismiss it publicly. Insider trading in Congress is at record highs. Those with access to reality are preparing, everyone else is being reassured that everything is fine. But the tools used to stabilize the last crisis, money printing, bailouts, zero-rate policies, didn't fix the problems. They inflated them. Now the bubble is bigger, the risks are greater, and the consequences will be far more severe. The signs are everywhere, and the timeline is accelerating. The crash of 1929 didn't come out of nowhere. For months, the disconnect between stock prices and actual value grew absurd. Radio companies were trading at 500 times earnings because people believed old valuation rules no longer mattered. Today, we see the same delusion. Companies worth hundreds of billions have never earned meaningful profits. Electric vehicle startups without factories or revenue command valuations larger than established manufacturers. AI firms with unproven business models are treated as if they can reshuffle the entire global economy. The excuses are always identical, this time is different. But the laws of economics don't change. In 1929, when reality hit, the collapse was brutal, nearly half the market's value wiped out in weeks. Today's vulnerabilities are even worse because bubbles exist everywhere at once: real estate, bonds, private equity, crypto, and equities. And this time, the system is globally interconnected. A failure in one region can cascade worldwide in hours. Algorithmic trading ensures that crashes happen faster and more violently than anything the 1920s could have produced. Our foundation is weaker, too. The last financial crisis left governments and institutions overloaded with debt and reliant on policies that can no longer be deployed without triggering catastrophe. Beneath the surface, cracks are spreading. Commercial real estate is collapsing quietly. Regional banks hold mountains of unrecognized losses. Pension funds make increasingly reckless bets to meet obligations they know they can't satisfy. Instead of confronting these realities, politicians and media simply paint over them with upbeat narratives. Societal trust is unraveling. In the 1920s, institutions still commanded respect. Today, trust in government, media, and financial systems has plummeted to historic lows. The next economic crisis won't just test markets, it will test the stability of the social order itself. Yet leadership responds with denial, distractions, and more of the same failed policies. Central bankers issue vague reassurances. Politicians throw money at problems. Executives enrich themselves while their companies lose money. The illusion persists until it can't. History always breaks through delusion. In 1929, the reckoning arrived suddenly for those who believed it never would. Today, the blindness is even more widespread, amplified by algorithms and media that profit from optimism. Meanwhile, the wealthy aren't preparing for a small correction, they're preparing for a full reset of the global financial system. They know that when this bubble bursts, it won't just take down overpriced stocks. It will challenge currencies, governments, and the entire economic order built since World War II. The only unknown is timing, but even that follows a familiar script. Market peaks coincide with euphoria and the dismissal of risk. Politicians ignore warnings. Academics insist old rules no longer apply. Households borrow against assets they think can never fall. Every pre-crash indicator is present. The stage is set. The cast is in place. And, as in 1929, most people will be stunned when the curtain drops. History may not repeat word for word, but its rhythm is unmistakable. The similarities between 1929 and 2025 aren't coincidences, they're signals. The same overconfidence that led Americans to believe the boom would last forever is flourishing again, dressed up in modern technology and new terminology. A crash is coming. The only questions are when it begins, how deep it goes, and whether you'll be prepared or blindsided like millions before you. If you like our content, so hit the subscribe button and stay tuned with us.